Good evening, traders, and welcome to another Profiteer Trading video. Today we're going to talk about the counter trend long strategy. Go ahead and take a second to read the risk disclaimer. Just remember that anything that you see on our website, on our videos, or on our Discord are just educational ideas and are not financial advice of any kind. All right, let's get started. So let's talk about the counter trend long that developed in high velocity during the final hours of trade yesterday. So here we have an example of the NASDAQ, and the NASDAQ is an equity, as you know. And for those that are newer, understand that the NASDAQ is the most volatile market in the equity space as far as futures go. So if you're trading the ES regularly, then the NASDAQ is going to feel a lot more fast-paced, high velocity. So one of the reasons that we chose NASDAQ at the close was to extrapolate profits in a high frequency, high opportunity attempt because of its high velocity. So using that market's behavior to our advantage can be a useful tool in the final hours of trade. So I want to first start off by talking about the development that occurred from the 3 days into the final 24 hours of trade. Now you can see that this box represents an area where value had been developed early on in the 23rd session, January 23rd. So we're sort of grinding around after some, medium-term concerns about the coronavirus. We start kind of pricing this whole thing in, really not sure yet based on the comments that we're hearing whether it's going to cause any sort of economic disappointments, economic difficulties, things that would give the market a reason to shut down, if you will. So something I want to point out is that this box is a development and a tool that is basically emulated again here. So you can see that as soon as we kind of create a low here and then create a breakout high, post the opening bell, this pink represents the opening bell period on both days. You can see that once buyers catch a bid out of this box, it explodes and causes a new grind into the close of the 23rd, into the overnight session that developed into the 24th, where we saw one more attempt for buyers to retest new highs. And then suddenly we see divergence into the opening bell. First and foremost, you see an enormous opening drive low into that value area that we had developed here. Buyers attempt to pull it off of that moving average, that 200-day moving average, where the box also lives, and we still cannot seem to break. So here you see a stop run where capitulation from all of this buying here occurs. This is clearly panic, clearly folks who got long way late and realized that it's way late. We fly into a large kind of resting liquidity at that 50% retracement, and then we fly up against that 38.2 retracement, and then head straight away back down into the break of the box, where we finally see the exhaustion occur from the January 21st low that is seen here. So again, for those of you that are just learning your zones, this is a zone that qualifies because it's got a 1, 2, 3, 4 touch by standard zone drawing. But remember, guys, it's dependent on what you're trading, but I won't get too much into that now. I just want to point out that 618 retracement and that confluence area acts as key support for buyers once that selling from an entire day exhausts. This candle here is a very clear indication that somebody was willing to buy off of this low. And what we're going to show you today is how we identified that with velocity and size in that moment. So let's go ahead and take a look at the time price opportunity. And I want you guys, and let's compare it to that chart there. I want you guys to take a look here at how we opened this opening drive, right? Opening drive, we try to retest this key value area in balance up. We bounce, retest the high, cannot break it, and then we flush. So this is that overnight Asian session. Coronavirus is developing. Buyers are still willing to hold above that initial imbalance. And then we see a wick up, and then the sellers are happy to offer. So we see offer into the opening bell, accelerate with velocity, go straight away into this excess that was developed prior and unfinished. We start breaking levels, breaking levels, breaking levels, breaking levels, breaking levels, and bam. Initial balance range from the 21st, remember, as we defined it. And let's go ahead and make this a bit more visible for you guys. So you can see the 21st, that low that we defined here, was a zone of key inflection, where if you're gonna see a large buying occur in high velocity in a market like NASDAQ, then it's gonna be here, and you can set your stops accordingly, knowing that if we break below that initial balance range low, then you're running into trouble if you're a counter trend long buyer. So once you see this wick develop and then get straight away absorbed back into this unfinished auction where our levels are set, that's when you know you've got areas to look for quick near-term high leveraged targets. And now we're going to go ahead and explain it on the price ladder. So something I also want to point out here, that we had some key technical lessons that you should take away from this presentation. And some of those are going to be the following. Let me go ahead and make sure that this is visible. So the opening drive low. So this is the Asian session, opening drive, right? You see a little bit of a bid up. And then here at the 9:30 bell, you start to break away. And I really want to kind of embellish this point. So I'll go ahead and show you guys the open outcry. And for those of you that are new, the open outcry is the term used to represent the opening hour of the New York Stock Exchange, meaning the 9:30 bell. So let's go ahead and expand this profile. I'm going to go ahead and zoom in. And you can see it represented on the candle chart here as well. You get a break below this area of confluence, and then here you see flush into the opening drive. There's your opening block. You've got a break into this previous day's imbalance, and then we start churning again right through those levels. So that opening drive is a key part of this presentation on a technical basis that you need to learn to apply to your intraday positioning. So we took out all these imbalances from the previous day. We had a P shape on the 22nd. We had basically a flat trend like firming up of volume and liquidity, just sort of stair-stepping up into these late end of month trading days. And then we get a bit of a volatility stretch on this coronavirus with two areas of unfinished imbalances. And then finally we open up at all-time highs with an opening drive low that gives us an accelerated move into that liquidity that had been developing over the entire week, where finally we retest value. Buyers say, okay, let's try to buy these 9200s. Are we going to hold 9200s? And then we take them out. Buyers capitulate, and anyone who's long up here has to get out and reconsider. Now they're sellers, right? So they're adding to the acceleration to the downside. Now finally, when all that is said and done, we find ourselves bouncing with velocity off of an initial balance range low from the exhaustion that you can see here. So sellers are, people who got long up here are basically now trying to get short down here. And I think we've all been there when we first started, where you're unable to find the direction and there's a lot of panic going on. And you think, all right, I got to make my profits. I'm going to short this thing even lower. And then buyers say, nope, we're going to pick this thing up on this single print and drive it back to this unfinished auction here. And this is where you qualify the smash and grab. And the smash and grab is literally what it sounds like. You smash sized lots into this area, and then you can leverage a smaller move back to value with velocity in order to extrapolate profits, regardless of the fact that you weren't in this longer trend-like move. And this P shape here, this is a P shape because it looks like a P. Now, I want to point out that we didn't finish that auction, and that's what made it an imbalance, which is why it looks like a P. So it's really important to understand and learn to subconsciously locate these patterns for later, because then when you start to see that value fill out and then you see an extreme unfair high like this one, then you can start looking to use those key indicators, and your brain will subconsciously say to you, hey, I've seen this before. Maybe we're going to start carving out some of that value area from these prior areas of unfinished auction, right? And that's exactly what you saw in yesterday's trade. And whether it was accelerated or not due to news, it still held technicals and market internal levels very respectfully. And that's something that we want to make sure everybody understands when learning how to read these markets. So let's go ahead and bring over the price ladder and talk about how that is developing in the trade. And let's move it over to this 1 hour chart so you can understand how we use our pitchforks. We've done a video on the pitchfork before and the confluence. So we're just going to explain how we kind of used everything that you just saw, as well as this sort of trigger for us to get into a position here. And you can see, guys, that we got long the 132 quarters. And in the 132 quarters was also where we got a very interesting sort of distribution of participation in the volume delta. And I'll show you guys what I mean. And note too that this is the 2 o'clock hour, where you've got quite a bit of sort of panicking starting to calm down on the short side, and people are finally willing to start kind of picking up that weakness in the NASDAQ and in equities overall. And you can see this on the price ladder. And here, let me pause it here and rewind a bit so I can really kind of explain this properly for you guys. So note the hour here. We're hitting the 2 o'clock hour, and we're starting to see a bid up on the delta. And you can see that in the profiles, we start to retest these levels of strength, and then we break through them, develop more strength and then break through them. Pause for a little bit. We see no participation. You can see nothing filled out there at those 152s. And then we head straight away back up. So pretty much a clean drive against all of that weak selling that just was way too late to the game. And you can see there, 179 bid, 147. 167 bid, 9,148 quarter. 103s. You start seeing those one lot or those 100 lots come in, and they're getting a lot larger. You see a seller try to come in here and offer 150s, and then he gets straight away bid up back straight to 152 halves, and that's where you really start to see kind of a slowdown. But you still see buyers and sellers willing to kind of let this thing find value due to that kind of extended exhaustion over the period of the day's session. And here we can see there's a delta divergence that occurred at that 2 o'clock hour. We hit the low of a 1600 negative 1600 cumulative delta, and then we began sort of grinding back up. Accelerated volatility, accelerated velocity for most of the day, but where we saw the least of it to the downside was in that 1 hour or sort of 10, 15 to 30 minute range of a smash and grab opportunity that we took advantage of. So let's go ahead and watch it. So we've bought the 132 quarters, and we're basically looking to develop a sized position through these areas of liquidity. And you can see we've got multiple lots on here, multiple contracts being used to extrapolate these profits in high velocity. Now pay attention to the mouse in the current trade, and pay attention to how we're taking the opportunity to get paid. The market is telling us, we're giving you an opportunity to get paid here on a trailing basis. You've got multiple lots. Take the chances that we give, and take profit when possible at your best levels, and then wait and see if it's confirmed that this counter trend, most importantly, because we're doing a counter trend long, continues. Counter trend, anything, whether it's long or short, needs to be short and sweet, because it's going to be difficult to really be sure that it's a full trend like reversal. And you can see here we're seeing some selling coming in. We're seeing a lot of offers coming below those 135 evens, and then that tail comes in there where buyers are happy to buy 134s again. They're happy to buy 135 quarters, and now they're even happier to buy above that back into my entry at 137 quarter. Then you can see my mouse is hovering just below in case they want to take it back to 135, and then buyers finally say enough is enough. We're taking this thing back to value. We're happy to buy 138 quarters, and that sorts out sellers who are late to start giving up on this short idea and realizing that maybe they need to flip over or just give up on any more selling in this market at this hour. And whether it's technicals or the volume profiles or the TPOs that you're using, all of these are giving you the same signals. It's just learning how to sort of execute them with confidence in a high velocity environment, and that's the nature of being a day trader. And if you want to trade a market that's more sort of thick and slow, then you can look at things like the bonds. But if you want a high volatility, high opportunity market, you can use the NASDAQ for those opportunistic days. So note that we're sort of snapping in between 36 half and 39 evens. That's a really great sign for bulls. Bulls are starting to hold that control. And you can see that even though sellers are happy to offer 139 quarters, buyers are no longer willing to buy below 136 3/4. And it's basically like a chase where everyone's just marketing in on this breakout trade because everyone's seeing the same thing. And on my Pitchfork Confluence here, you can see that we arced out of this early morning trade into the Asian session, Asian session into the early morning kind of highs of that sort of retest of this midline slope, and then we came back through this key inflection at the 1% retracement, retested the 618, and then wicked out, and then retest below, and then finally catch this sort of hammer-like bid that, you know, if you're a long-term trader, that's certainly not that attractive. But as a day trader, this is definitely a place where you can look to extrapolate in high velocity like we said. Here we have a clear bid up through 140s now. We can take some profit, but we can also stay confident that we can leave some on the table to let this thing play out. And you can see that I'm trailing. I'm making sure that no matter what, we're getting paid on a counter trend, because you don't know when you're going to run into that strong selling or that strong bit of news that, you know, dips everything lower. And then we're trying to develop a good view on inventory here. We're kind of seeing where inventory is appearing and disappearing. We're continuing to get bid up, and we're continuing to just kind of shave off that position and get paid. Because I say it every time, get paid when you can, not when you have to. I think one of the biggest mistakes I made in my early career was getting paid or looking for, you know, dollar moves or trying to catch like a one lot on a really large spread. And I just don't think that's realistic. I think you have to be realistic of what day trading is, and it requires knowing when it's time to size and knowing when it's time to take profit within that strategy. And if you want to be a more passive trader, then there's ways to do that. But again, it's all about knowing your style and sticking with it, and knowing that you're confident in that style. So you can see now buyers are a little bit more hesitant to break through 150s. And we're looking to really kind of see sellers give up selling those 150s, because now you're not seeing a lot of offer down there. And something to note is that 147, you see nobody offered. So if nobody's offering 147, then sellers are starting to realize that they need to offer higher, because it's not worth offering 147s anymore. And buyers need to find conviction in that. And here we go, we're trying to offer 147s. And if you're watching this ladder, then you know it's time to buy 147s. Kind of snapping against it, absorbing. Sellers are like, come on, let's press this thing back down. And buyers are just saying, we're sorry, but we're not going to let it happen right now. It's the close of the day on Friday. That was enough selling. We need to even out here. And you can see my trading mouse is considering the bid here. Waiting patiently for that confirmation in high velocity. And really notice that sort of distribution right at that 147, where, you know, sellers were just not even offering at one point. And there it is. We get confirmation, and we're just waiting for that burst higher now, where sellers are going to capitulate and really let off those contracts. Because remember, if you're a seller, you're a buyer. So they're all going to buy to cover here and cause acceleration. And if I'm not mistaken, I don't think we took the majority of that ending leg that brought it to 170s. Let's see. I think we take at least a quarter of the move. Retesting 150s. Seeing more of that absorption that we like. And something that I'm working on is, you know, knowing and trusting myself a little bit earlier than I did in this particular trade, because we took confirmation about 10-20 ticks prior to about 8 or 10 ticks ahead of where we should have been getting long. But you know, that's where you can kind of learn to craft your strategy to be a little bit more defined and execute a more kind of detailed, specialized move depending on the market that you're after. So we're testing those 53 quarters, and then this is right about where our mental capital exhausts, and we We consider 52 quarters for the breakout, but at the moment we're kind of clearly sort of hesitant given the hour of the day if we're going to be able to break those 150s. Kind of hovering over the offer, seeing if the offer is going to come in strong. You know, if 154 is the end of that counter trend, and then you're seeing buyers are happy to buy 155. They're happy to buy 1 3/4 or 155 3/4. And there it goes, gets bid up straight away back. And then we're looking for a small offer here just to kind of pull that thing back there. And that's just for cut and reverse sort of training, if you will. And just learning to kind of get in rhythm of the market. It's important, guys. I think I had a magic number at that end of that day. It was like 3K or something, and I was at like 299 or something, and I wanted to finish it off. So, all right, guys, that's the video for the day. I hope that helps you in your development and your strategy going into the new week. And we will see you all tomorrow to discuss the open. All right, take it easy.